Moving on, ladies and gentlemen, I'm very pleased to welcome Ms. Sadia Khan, the Commissioner at Securities and Exchange Commission, who happens to be the first female commissioner at the Securities and Exchange Commission, Pakistan. Mashallah, she has a unique experience, and I was very intrigued to learn that, a unique experience of investment banking, multilateral institutions, family businesses, as well as having worked for regulatory institutions, both SECP and State Bank of Pakistan. Mashallah, she has recently written a book by the name of Corporate Landscape of Pakistan. I'm honored, probably authored a book as well on the corporate landscape of Pakistan. So without any further ado, I welcome you, Ms. Sadia, to deliver your welcome speech.
Bismillahirrahmanirrahim. Respected dignitaries, esteemed speakers, representatives from academia and industry, those of us joining us online, ladies and gentlemen, Assalamu alaikum. Thank you to the organizers for giving me the opportunity to share my views at the World Islamic Finance Forum 2022. Considering the distinguished lineup of speakers and topics chosen for the event, I'm confident that discussions at this forum will help us in charting an impactful roadmap for the future of Islamic finance. Ladies and gentlemen, the consistent and healthy growth of this segment clearly demonstrates the future potential of Islamic finance, not just in Pakistan, but internationally as well. This is primarily because Sharia principles provide a basis for the complete financial ecosystem by encompassing inclusivity, social justice, equitable distribution of wealth, and shared prosperity, areas that have received even greater attention in recent years. Overlooking a vast regulatory mandate covering capital markets, insurance, NBFCs, and the corporate sector, SECP's foremost objective is to develop financial markets that support economic activity and enable a financial system to efficiently serve the economy. In this regard, I would first like to share the current progress of SECP's reform agenda and talk a bit more later about the future direction. SECP has introduced various reforms to facilitate the growth of this segment through improving governance standards and introducing enabling provisions in the regulatory space to improve the supply side. On the governance side, SECP established a dedicated Islamic finance department way back in 2015 to support the development of a sound, fair, and resilient Islamic capital market, while also ensuring its effective enforcement. In this regard, the promulgation of Sharia Advisors Regulations 2017, Sharia Governance Regulations 2018, and adoption of AOFI Sharia standards merit a special mention. On the product side, reforms and introduction of new products have aided the segment, being a major player in the non-banking domain. Here, I would like to briefly touch upon some key highlights. Firstly, growth of sukuks, which have garnered keen interest from the government of Pakistan for meeting its developmental and infrastructure financing needs. By some estimates, the government of Pakistan has raised approximately rupees 1.7 trillion in recent years through issuance of sukuks, and in the first of its kind, rupees 200 million energy sukuk issued by Power Holdings in 2020 using PSX book building process, saving the government significant financing costs. Now, reforms in the Murabaha share financing product, which have resulted in over USD 10 million financing, not a great amount in itself, but a healthy sign of things to come. The growth of the Islamic NBFC sector, which currently represents 28.9% of the entire NBFI sector, with 35% of the assets under management of the mutual funds and 65% of private pension fund industry being Sharia compliant. The evolution of the Thaqaful sector, which has witnessed remarkable growth since promulgation of Thaqaful rules in 2012. To give some perspective here, the gross premium figures for Thaqaful, which were rupees 5.3 billion in 2012, have grown to over 55 billion in 2021 and account for 14% of the market share. The number of Thaqaful operators at the same time had increased from to 34 from 5 in 2012, showcasing the demand for such products in the market. Now, this brings me to the second part, which is what is our roadmap for the future? Based on recent trends and as already witnessed in convention finance, SECP foresees a huge supply of Islamic fintech products, including micro and digital Islamic takaful, concept of WIFF-based sukuk, and new concepts such as P2P lending and crowdfunding. Accordingly, as a policy response, SECP has been actively working on introducing the requisite framework that promotes innovation and leverages technology that caters to the Islamic fintech market. In this regard, as you all know, SECP's regulatory sandbox provides an ideal platform to all innovators to test their solutions in a controlled environment before their mainstream application. In its first cohort, a dedicated digital-only takaful operator model was received, whom we heard from yesterday, and after successful testing has spurred the development of regulatory framework for introduction of dedicated digital-only insurer takaful operators. Moreover, in the second cohort, a parametric-based crop takaful project is currently being tested, which undoubtedly would augment the development of agri-value chain in the country. The SECP has also enhanced its focus on stimulating the demand side of sukuk by encouraging blockchain-based retail sukuk insurances, allowing tokenization of funding for enhanced financial inclusion, reducing intermediation and, of course, transaction costs. This will result in less bike shedding and more focused orientation in achieving the high potential of sukuk. In addition, SECP is also undergoing research to use sukuk more skillfully and constructively for ESG, green, and sustainability themes in line with UN SDG 12, that is commanding an expected market of $1 trillion USD, with sukuk currently having a $15 billion share. Now, I would like to conclude with some parting thoughts. I believe that a robust and innovative Islamic capital market can be a game changer, as a vast component of general investors prefer Sharia-compliant investments and products. This is evident in the growth of sukuks, NBFCs, and the takaful sectors I touched upon earlier. To build upon the foundation for an advanced financial capital market, there should be greater focus on innovation and the use of technology. This is an area where I believe conferences such as this play a pivotal role by bringing together all the stakeholders, the government, the regulators, Islamic finance practitioners, and the academia to share ideas on the steps needed in promoting Islamic finance. I'd like to take this opportunity to encourage all financial institutions, especially banks, to work on startups and structure and pilot innovative fintech solutions, as it is a win-win solution for all. I would also urge Islamic financial institutions to raise funds through the capital markets in Pakistan, especially through sukuks, as it offers a viable and cost-effective way of raising funds. It will not only help develop the local debt market in Pakistan, an integral part of the overall economy, it will help in efficiently mobilization and allocation of resources, especially towards infrastructure projects, a pressing need in the local context. I'm also hopeful that discussions here would help address the many faith-based misconceptions and misinformation regarding some financial services, in particular insurance, which I oversee, that have kept our savings and insurance penetration at the lowest in the region. In conclusion, we at the SECP assure you of our fullest support for the betterment, development, and growth of Islamic financial services in Pakistan. Thank you.